What's up everybody? Welcome back to the channel. If you're here for the first time, please do us a favor, hit the like button, subscribe and hit the notification bell down below. Leave a comment if you have any questions or queries to me or about the content that we're talking about. Or of course you can also contact me on my social media platforms, so on Instagram, Facebook, under the tag at Vukasakhecapital and at masonabe_chobonga. So yeah, don't be afraid to reach out and contact us, or you can send me an email, Vukasakhecapital@gmail.com, if you have any professional queries, because obviously we are a consulting agency. So yeah, anyway, let's get into it. Now, obviously, before we begin, I have to make this disclaimer that before you make any financial decision, guys, please do speak to your financial advisor. So that means anybody that you consult in that has an FSCA accreditation or is an FSP, meaning a financial services provider. Please do consult them and speak to them before you make any financial decision. This platform is purely for educational purposes and we're just trying to share it, okay? But that doesn't mean, obviously, don't share with your friends. Do the research and as well as communicate, because this is what this channel is all about. Financial literacy and us building this community where we have this conversation. So yeah, let's get into it. Today we're going to be talking about the asset class referred to as bonds. This is part of our Financial Literacy 101 series. So if you haven't gotten a chance to check out our previous videos, please do check them out. They're going to be a little bit different from this one, but we were just starting out, guys, so please give us, that leeway. But please do check it out for the content, because it's still relevant, it's still very important, and it'll basically give you an understanding of what we're talking about and what we're trying to achieve, which is spreading financial literacy to everybody across South Africa, across the world, and trying to reach as many young people so that they can become more active and become more, empowered by the knowledge. And yeah, please do share with your friends any information that you feel like might be relevant for them, that might benefit them. So yeah, anyway, today we're talking about bonds. And I want to make a James Bond joke here, but I'm scared for copyright issues, so I just won't. But I'm going to try and make it as easy and as simple to understand as possible. What are bonds? First of all, basically a bond is basically an agreement between one or two parties or more, where there is large sums of money involved, usually, where someone takes money from the other and then an agreement is drawn up. And then, yeah, that agreement can be aka a loan. That's the one that most people are familiar with. It's a bond in a house. But the reason why we're most familiar with it is because that's the one most people in their adult life utilize. So when you want to purchase a house, you get a bond, meaning therefore you come to an agreement with your bank that they'll give you a certain amount of money and then you'll pay it back with interest. All right? Now, these principles operate for all other bonds. All bonds operate in that, meaning there is a principal amount that is borrowed from one person to another, a large sum of money, and then interest is attached to it. Now, you might be wondering to yourself, how can I invest in a loan? This basically okay, let's go back. I want to lay the foundation, right? So where did all of this thing start? This started probably around about the 1400s. When nations used to go to war a lot. Like, guys were fighting a lot back in the day for land, for resources, for everything, because lines weren't drawn out. What's that thing? Borders weren't a thing. They moved all the time. So as a result of that, a lot of nations conquered other nations, trying to dominate and improve their boundaries. Then a very interesting niche of work came up, which is basically workers, aka warriors, for hire, which nowadays we call them mercenaries, but back in the day, basically you could rent an army. So what nations would do is that they'd pay an army to come fight their war for them. I think it was the Italians who initiated this whole system, whereby they hired a man from London, and then him and his army conquered. They were beating their competitors, and then in the midst of all the chaos, they were winning, and then the other team was like, actually, we can pay you more. Come work for us, and then fight and kill them. And he did it. He legit did it. He switched sides. So back in the day, they used to fight a lot about that, and as a result of this, governments started needing more money to fund their wars. This led on to the problem where even today we still have this problem where governments can't raise enough money through taxes, because that's how governments make money. It's the taxes that we pay, right? So there's obviously an inherent limitation in that. They realized this, and then they saw, okay, what are the solutions that are open for us to be able to raise more money, raise more capital, so that we can do more things. And then a very interesting idea came up whereby they thought, why don't we just borrow from our people? I mean, they have money, they have savings. Why don't they borrow us the money and then we'll give it back to them? But then they started asking themselves, okay, if should they give it to us, what does this mean? Because they're not going to do it for nothing, right? So they realized, okay, let's put interest attached to it. The bonds that we issue out to them will pay them small amounts every year or every quarter, and then this will be a reward for them giving us money. And at a certain time period after the war, meaning after so many years, 3, 5, 7, 10, whatever the agreement might be, they will, obviously the principal has to be paid back, meaning that we'll have to pay them back all of the money that we borrowed from them. But they were making money along the way through the interest payments that we're making to them. So yeah, that's where the whole bond market started. They issued these things, these certificates. People were holding them, bought them and everything. But then it became a problem when they realized, wait, what if people come back and they're like, hey, I need my money back because I need to, I don't know, buy a new car. Okay, there weren't cars back then. Buy a new horse. Let's just go with that. So they want to buy a new horse and I need cash. So we can't give them back the money because it defeats the purpose, because we need to hold this money for a long period of time. So governments came up with a system and a market whereby bonds can be bought and sold. They created the bond market, meaning that the holder can sell it to another person. Now the debt becomes the instrument. The debt itself is the asset. Because think of it like this. In accounting, a person who owes you money is your asset. But if you owe someone money, they're your liability. Okay? So think of it just simply like that. It's an asset because there's something that you're getting in return for it. So if you hold the bond yourself, it means that the interest payments that they're making toward this bond every year or every quarter, whatever the agreement stipulates, you're benefiting from it. Therefore, you're generating income from it. That becomes an asset. And you're a liability to them because they're paying you. So they knew that states inherently are very long-term, meaning a government will outlive its people. Meaning that now the risk associated with it is very low. And the rules of interest is that the higher the risk, the higher the interest. The lower the risk, the lower the interest. So if you're looking for a high yielding asset, meaning that you're going to get a lot more money out of it, bonds aren't the right instrument you'd go for. It's more stable. It's something that you go for, that you want to, you want to be secured in it. But obviously I'm open to major correction, because 2008, there was if you're not aware, a housing crisis, because people started losing track of all of these things. People started losing track of all the debt associated with it. That's when we realized that bankers don't know that much as they pretend to, because they like money more and they stop keeping track. If you haven't watched a wonderful movie called The Big Short, please do. It's a wonderful explanation into the inner workings of the bond market and how in 2008 a simple, easy to understand system of making money became this mean, grotesque thing that escalated and washed the entire world out of all its money. Well, not all of it, like most of it. A lot of money was lost during the 2008 crisis because they realized that it's all speculation. People are betting on bets on bets. I could go further into this, but I don't want to waste too much time. But in essence, in South Africa, I want to bring it to today's market. In South Africa today, since 2009, the JSE was in charge of the regulation of the bond market, so it absorbed the bond market as a result of the 2008 crash. And as a side effect to that, what happened is that the regulation when it comes to bonds became more strict. Now there's more overview. Now they have to keep track of these things because they realize that if the bonds fail, the government can fail. Because if the government can't pay back its bonds, meaning its debt, then obviously the government will fall. That's how some countries have actually gone into very bad economies. An example of this is Italy, Greece, Spain, even Argentina. So economies can suffer if the bond market fails. But if you go back now, after that whole issue of trying to raise money, matter of fact, even the Rothschild family, if you're not aware, made their money through bonds because there's a large potential of income that you can make from it and profit, but you need a large pool. And why I say this is because while in South Africa the government does issue bonds, the Treasury Department, but the normal price for a bond, South African bond, is 10 million starting. So 10 million rand is a lot of money. And if you're on this channel and you are worth or have 10 million rands to spare, hi. But if you're like the rest of us who don't have 10 million to invest like that, it means that you can't really access a South African bond by holding it yourself. But don't worry about it. There's other ways that you can get involved into bonds without directly purchasing a South African government bond. There is collective schemes. Therefore, you can be able to go into a holding because there's three types of bonds basically. There's the corporate, there's the government, and then there's repo market. The South African economy, by the way, is probably, the bond market is worth 1.8 trillion rands. Every day we trade around about 25 billion rands. So there's obviously a huge market and there's a huge amount of money that's flowing. And if you checked out our previous video where we talked about cash and cash equivalents, we mentioned that most of the money in the economy is not physical. It's not cash that you can hold or see. Most of the money actually in the economy is floating in the financial spheres, meaning that it's ones and zeros. It's all digital. Therefore, all these transactions, we don't have access to them because we're not actively participating in these markets. These markets exist, all this money exists. It's just that it's in a different area and we just need to access it, meaning we need to partake and be included into it. So as a normal South African, you put your money into into bonds by trying to have a long-term perspective because these contracts can be 3 years, 5 years, 7 years, 10 years, 20 years, and they have a certain proportion of income. But with as little as 1,000 rands, you can get involved into SA retail bonds. You can purchase them, as well as other schemes that you can join and partake in, whereby you get a small portion. So in your investment portfolio, you should always look at having bonds included into there because this is an asset. So that money that's tied up there, that contract that's there, you can also get leverage on it, meaning you can use that to purchase another asset. And that's something that we're really trying to teach on this channel. When you have an asset, use that asset to generate you more assets. When we were talking about equities before, as well as real estate, we're talking about utilizing credit, meaning looking at a bank as a business partner where you give them an asset, which is your bonds, your equity, or your real estate, or your cash, and then you say, hey, I need your help to get another asset. And once I got that asset will generate income, which will pay back the debt. That's the thing that we need to get used to as South Africans. We need to get, especially as young South Africans, the sooner we start, the quicker this thing grows and it develops into something awesome. And this is why when you're going to join bonds, you need to do the research into what kind of bonds are you specifically investing into. You need to be very aware what are the risks attached to it, especially right now. Right now we're in the midst of coronavirus, and this whole thing of COVID-19 has affected how we normally do business. because we saw something that we're not really like used to, where the Reserve Bank is now purchasing government bonds. As a result of this is very unusual, by the way, because the government, meaning the political side, is borrowing basically from the Reserve Bank. And the Reserve Bank is supposed to be very different things. So now the Reserve Bank, by buying government bonds, it means that it's loaning them this amount of money. And the Reserve Bank is encouraging other institutions and other corporates to buy government bonds. And this is how we've been able to raise the amount of money that we have, so that South Africans can get the stimulus check, can get the grants that have been provisioned, the social relief schemes that have been opened up, the increases to the SASA administration. So yeah, there's just been a rolling effect, because we're trying to adjust to the weird and tough economic times that we're in. But it's very important that we understand that this is a time period. There's obviously ups and downs in everything, and things are gonna go back to normal-ish. There's gonna be some tweaks and some changes, but things are gonna stabilize. Therefore, we need to just understand the basics, so that in the future, when we are getting into bonds, we understand that we're going long-term. We're trying to put this aside so that we can grow our assets. Okay, so end of it all, those are bonds. Like I said, there's many ways that you can get involved. Do the necessary research, but bonds as an asset can be very beneficial for yourself, because they show stability. They show assurance in that you're able to hold on to something and not use that cash that's there. So idle money usually gets spent on meaningless things, which is why it's better when you do get a large sum of money and you don't want to spend it, and you know you don't want to spend it for a long time period, just put into bonds, put into something secure, so that you can be able to like relax and live your life, accumulate wealth, while you think about how can I multiply that money, how can I reinvest it, how can I save it. When I get the maturity date, which is the date of when it's complete, according to the contract, what am I going to use it for? And then you live off the interest. You see, you do those small things, those small good habits, and you're going to be sorted. So anyway, without taking too long, I just want to end it off there. I hope that it's very beneficial for you. I hope that you join us again for the future videos that we're going to be doing on assets. There's just a few more left, but we're going to be capping off this series and going into another series where we're talking about other finance, the second step. So yeah, please do again like, subscribe, and hit the notification bell, so that you can be notified every time we drop new content, as well as you can be up to date by communicating with us. So leave a comment, I'll try and respond. I do try to respond actually. Or you can contact us on our social media platforms, so on Instagram and Facebook under the tag Vukasakhecapital, or at masonabe_chobonga. Rather, if not, then you can just send me an email, vukasakhecapital@gmail.com. Please do check out our other channel called Hustle and Motivate with Masonabe Chobonga. We're trying to have as many platforms where on that channel we basically deal with hustle and motivating people to just get started. Get started on your dream and push yourself to do new, wonderful, and exciting things. Because I believe that as a people we can do great things. We just need to have the right mindset and have the right information, meaning the tools that we require to build something amazing. So yeah, I'll see you guys in the next video. Cheers.